Hey, everybody, welcome back to Swing Trading. My name is Mike Fairborn, Senior Manager, Trading Derivatives at Charles Schwab. Hey, folks, today I want to take a look and just take a step back and see what companies out there may be showing signs of accumulation in terms of buying. We do like to look at the money flow indication for that, and then base some trades around that, some swing trades, and see where maybe some of that smart money, it's also termed a smart money indicator, maybe where some of that smart money might be funneling into certain areas and certain industries, sectors, industries, and different stocks specifically. So we'll drill down into that today because a lot of that buying pressure can accumulate kind of quietly behind the scenes. Excuse me, behind the scenes, and that can help position stocks many times for a more of an upside bias for those people that do follow the money flow. That's a lot of sense what they'll look for. So we'll dive on into that today with you all. And great to have you all here today. We have Ben Watson in the chat, 30-year veteran of the markets. You've seen Ben out on in many of the presentations, the live presentations. So great job there. And we appreciate Ben being here. Folks, you can follow us both on X. Be sure to follow Ben. Ben Watson CS, Mike Fairborn CS on X. Hello to you, Rojo. We've got Scott coming to us live from, well, it's got to be Hawaii. Aloha. And I don't know if it's the Big Island, Scott, but he might have told me one time, but he's got to remind me. I was at the Big Island not too long ago, and I loved it. We did go to Honolulu, though, as well. Hello to you, Wacky, as well as Jay Richardson, Michael, and others here, Robert, Riceberg, and many more. Cecil, Olga, Kevin, Will. Good to see you all. Will's got the sunshine coming out for us. Awesome. All right, everybody. Hey, let's dive on into some disclosures so we can get going here. I got a few things to discuss today. All right. This material is intended for general informational and educational purposes only. Options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paper money software application is for education purposes only as well. Investing involves risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Now, there's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. Dividends are not guaranteed. And finally, a good look at our futures disclosures. Futures option trading does involve substantial risk, not suitable for all investors. We just look at the charts here. We don't trade the futures. We got a class for that Ben will oftentimes teach here for us. In fact, he does every Tuesday morning. Not just often, he does every Tuesday in the mornings. Okay, well, with that, everybody, let's get rolling here. I did want to just take everybody, just give you guys a quick look. Hey, of that Artemis 2 floating out there, it is kind of fascinating. You know, from the moon, we see a crescent Earth, or we just see a full Earth or a new Earth, like a new moon. But it is kind of an interesting, some of these images are just fascinating. And NASA has really tapped into the private sector, which is amazing. They've just reached the furthest point that any human beings ever been from Earth on the dark side of the moon, see things that they hadn't seen. I thought it was amazing. It's amazing stuff, what they've been able to do. But anyways, that's that. I thought I'd just start off with a light just discussion on that, or to show you guys that. Okay, let's dive right on into our markets here and take a look at what we've got. Now, we did see a bounce back in the markets, and there has been, a lot of news out there and market moving news. And how do we know it's market moving news? Well, first of all, these are big moves in the market. Also, the VIX right here, bouncing back a little bit. There were some deadlines set in with the Iran situation. A lot of times those, you have to just park yourself back and say, we might have seen this before. These are kind of like negotiating tactics. And a lot of times when words are being mentioned, they might be mentioned to the other side. We just don't know. And I'm just trying to put everything in context. So when you look at the markets, it might explain why the markets are only down a certain amount. Just jumping over to our futures over here. Now, it's been bouncing around a little bit today, but you can see up here we're currently down about 47, but it's been holding really in a range, as you can see very clearly over here. We're still not doing a ton, and we're just kind of, I'm just kind of curious if we hold this level or not, or if this does become an inverted, which we talked about last few weeks. just would bring it up again though, an inverted up and handle. Remember we said there could be a flag. Well, we mentioned that in the markets and sectors class, folks, and it could do this if it did. That target is somewhere around 6,000. It's a little bit above it, right in this range right here. I'm just eyeballing it, but it's somewhere in here if in fact it reaches that target. Now, the real question is though, if it can hold up above this level here, that could be interesting. You know what I mean? Because then all of a sudden, especially if it begins to make a higher low, because what can happen is when you get a major chart pattern, folks, that doesn't work out, it's more weak, then you can see a stronger move in the opposite direction. And that could simply just mean to the upside over here. That is in fact possible. Oh, we don't know. But we're kind of in an interesting phase. How many times have we said that every week? We're kind of in an interesting phase. Boy, it just keeps on coming. But there we go as we look at it right here. Okay, just a quick note too, because we do like to dive into this. I'll just jump right into the index here. There's the NASDAQ. You can see that this one hasn't quite got above its highs here. And remember, I always like to say this because I like to keep it fresh in my mind too, that the Mag 7 is really accounted for. I don't know if it's specifically at that point right now, but roughly 40% of the movement of the S&P 500, not just the NASDAQ 100, but the S&P 500. It can play a big role, and if that can turn the corner, that could be all else equal a positive. Again, this hasn't come up and breached above normally this resistance level, and you just say, gosh, that looks a lot like the possibility of a cup and handle on the inverted side. Super quick because it's so fast and easy to do. All we have to do in the chart right here just to see this is just do that. You can just see the cup and handle. Probably really, a lot easier. Our eyes are just more accustomed to looking at the bullish side because that's what we look at. Well, a lot of us do. The markets have been up for so many years. We're always looking at, of course, markets can go down too, but something like this over long stretches of time get us sometimes accustomed to looking at the bullish side because prices have tended to, well, going back over the last 15 years and more, to the upside. Anyways, let's dive into last week's, just a quick review of our trade that we did last week. And we've been saying, in trying to take advantage a little bit in this class of the VIX itself being at high levels and how that can influence option premium, all else equal, more bang for the buck, so to speak, all else equal, that is. When you're getting above that 20 and certainly above that 25, you could do that. And in this particular stock with Apple, we did look at the, well, we said, hey, there's the upside some could look at. It looked good for a little bit. We were just looking for the possibility a bounce back up to the measured move, and that would be the prior range high up top here. We got about this far and we reversed, and that's one of the reasons why we did this short put spread, the short put spread here, because we said, hey, if it goes into a sideways range, some traders will just look to at least collect income on that. I don't know. We got already an exit in place on this. If it goes up against us to the tune of, to the point of getting up, sorry, 1 second, let me just stop that for 1 second. Getting up to, double the amount of the initial potential credit. You can see over here, this is down actually. That short put is actually down off of today's move, which is down 8. It was doing pretty good until today hit. We only have 10 days left to expiration over here, but we are down on this spread, not quite to the point of an exit, but because we did get out, anyways, it's not quite to the exit. We've got this level set down here, but this is not really set to exit at, or try to exit, right? It's a stop order at a particular level here. We're more just gauging this off of what was our credit. Remember our credit, if our credit was like $1.80 or something, or let's say $1.50, then we would get out at $3. We're going to risk what we stand to gain, like on a 1-to-1. Anyways, long story short, this volatile market, we were hoping for a little bit of a pop-up here, even up to these sort of levels here, but Well, it came back down. It did bounce off the lows, and this still remains an interesting level of support. But that is our existing trade. It is still a little bit down. There is some time decay, and each day that goes by, especially within those last 2 weeks, it can be pretty big. And this would all be ahead of earnings right here, too. So we'll see what happens there. But getting into our discussion today and really tapping into that money flow discussion. Now, I've brought up money flow in the past. It's one of those indicators that I will look at. It's a little bit of a different dimension. We're looking at let's see if I get this going here. Money flow, there it is. Okay, so money flow, we're looking at a volume indication that can give us an early warning or an early indication that prices might be being accumulated or being distributed. Okay, and it does that over a period of time. Now we're seeing some of these companies over here, and I'm looking at some of the tech stocks right now, the Mag 7 as we look at it right now. But the Mag 7 itself, you can see there are some, and by the way, there are some growth prospects for this company as well. But let's talk about the indicator, and I can just use Apple in the meantime too. In fact, what I want to do is go ahead and just throw on volume so we have that as a quick reference here, because that is what we're looking at here. Okay, so here's our volume. And just a quick reminder of this, because I will reference this from time to time. And what this indicator simply does is it just tracks volume itself. And it says, what's the magnitude of that volume? It's going to kind of point down to it, and whatever volume bar, that represents on this particular day. Did we close below the prior day? In fact, we did. And if we close below the prior day, then we will subtract this volume amount from, in fact, I'll just put it in red here. We will minus that volume from the money flow line. We'll minus it, minus that volume, okay, from the money flow line itself, and it will drop. And what this tells us over longer periods of time, we get to see this over a longer stretch, is where it's really, I think, useful, is over something like a 1 year or 6 month time frame. You get to see characteristics of the line. Is the line going up? Is the line holding sideways? In other words, all else equal, are we seeing more buyers or more sellers on an up day? It stands to reason if we closed up on the day, there was probably more buyers than sellers. If we closed down, there were probably more sellers than buyers. This line can help us get an understanding of that according to the way traders will use it. Okay, that's how it's used. And you can see over here, yeah, we did come down on Apple a little bit. And, we kind of went into a sideways channel, though it's not been that weak. In other words, we could have dipped lower, but it's kind of been in line. But you have to say over here, like Apple, we hit a high right there on Apple. Where did that high come in at relative to stock price? Right here. Sorry. I'm still getting used to this mouse. It's ultra sensitive or something. The other one let me make, I guess, errors as I was drawing straight lines, but not this one. It's ultra sensitive. This high right there is the high on money flow. But on prices, you can see right there, it is not. It is not. Obviously, this is the high. This shows strength. And so we actually saw from this low right here, up here to this point, we saw actually buyers coming in. According to money flow, there were more buyers right through here. And it takes a lot traditionally to move a company like Apple. It takes a lot of buyers it takes a lot of, just buying pressure in general when prices are closing up to influence this money flow line. And that's why it's interesting. It's oftentimes seen as an institutional indication, a smart money indication that can be tied with price action using volume. Now, right here, we're just kind of going flat. I'm just using our example here, but you can see we came very close to similar lows over here. But, well, when it came to, and it was close. It's not like the perfect example, but we were definitely off of these lows right there. That line is going slightly up, but of course, this line is too. So it's kind of in line. Where it does become interesting is when we're watching this and prices start to go like this. And that's what we're going to talk about today. are those companies, and it's quite rare. It doesn't happen very often at all, but we're looking at this when prices break out, but yet, money flow breaks out, but prices are holding lower. So volume breakouts, really interesting. Here's a one. We'll look at one. And by the way, a lot of these companies here have been showing some interesting signs in terms of projected revenue and earnings for the first quarter of 2026. If you look through what we've got on the Charles Schwab scan, which I'm going to dive into in just a second to reference this, some of these, but look at Goldman here. Do you guys see what I'm saying? What's interesting is we are seeing institutional type buying, which is often perceived as institutional type buying. We're breaking highs. What was the high over here? Well, it was previously here, right around this range. And you guys can see where I'm pointing at right through here. We've clearly broken above that level. And in fact, what's crazy is we were actually breaking out as prices were still dropping. Look at that. You see that right there? That is the high right there. That's the high range. And we took it out. We took out this high at a lower price. This can be a sign of slow accumulation by those institutions that do, a lot of times they do the best they can not to influence price, but as price is going down, what are they doing? Picking up, possibly picking up shares according to money flow. Look at this over here with me. Did we hold up near this level of support right there? In fact, we did. We did hold those prior highs. In fact, we bounced. What else did we do? Well, we bounced here again. You see it? A higher high, a higher low. We broke up above this level. Money flow is saying this. Now, this is that early warning sign that I wanted to tell you guys about. It says this high right there. Let me clear this off. This high right here, because we already broke above it on the money flow side right there, we actually clearly broke above it. It says, according to money flow, we should break this high or even break higher. Now, what is that big level up there? That's $1,000. That's 1,000. Now, 1,000 could be a big round number, but maybe we come back up and test near this range. Maybe it's 1,000. Maybe we slightly break above it, especially if this keeps growing higher and higher. So the thing is we're now using a little bit more money flow signs and indications to give us some insights as to prices really continuing to break up higher. Now, there are earnings right here, as you can clearly see. We've got earnings. Okay, do we have an earnings? No, there's no guidance on it. Generally, though, these banks and financial institutions, now I'm not going to really highlight it during our discussion right now, but I did post some notes in here in terms of revenue and earnings that you could potentially reference within my X handle here. And I'll just throw those in the chat because they are there. The graphs are there, you guys. All right, if you want to check them out, you can take a look at it. But I'm not going to show them here. I'm not allowed to get into that. But there you go. All right. So, do we wait for this, or do we say, "Gosh, that's interesting. Maybe there is some guidance coming in for these companies that look strong in guess what? Q1 of 06, and that's this time frame right here." So is this, my point is this, folks, what was happening over here? Do you see it? Look at this. That's Q1. Let's highlight it, of 06, 20, 26. The guidance was higher in here. What are we piecing together? Money flow drifting up even as prices are going down. What is the smart money doing? What is institutional money? What might they know that we don't know? I mean, they're obviously, they talk to the executives, etc., and we don't know, but we're just saying that these things could be things that some traders, investors might look at, right? These are correlations that they could look for, right? Expected growth in an area during that quarter, and then you start to see maybe investors or large trades or just bigger volume blocks putting their money where their mouth is, so to speak, which is exactly what volume tracks over here, right? So are we getting that? The question is what kind of a trade do we put on here? And are we confident in, are we still looking at the a short kind of a spread on this because we don't really know. I know we're seeing some signs over here. Obviously, earnings can be huge, but the VIX is higher, and all else equal, we could see some higher moves here. I'm just going to show you. We've got to carry it through this time frame anyways. So normally we look for a swing trade time frame, and then we add maybe, like a month at the end of that. Sometimes, oftentimes it can be, between 20 to 50 days. And so we could come down here. I know we're higher here, but even, down in here, selling in the 775 or 7770 range, some traders could look to do that. Let's check it out. And then I've got several more trades to look at here as well as we dive into this, but I'm going to go a little bit longer. We only got 10 days left, and the 38 number here, days left, still kind of fits well within the time frame that we're looking for. I need some more strikes though. We'll just take a look and see what our return on risk would be as well. And by the way, Ben just threw out a note in the chat. Thank you, Ben. There is a survey link in the chat, folks. If you get a chance to fill that out, that'd be great. There's only 2 questions in there, and then there's a comment box. I always really appreciate you guys doing that too. My manager, looks at those. I look at those, and thank you. And by the way, if you are getting value out of this discussion, smash that like button if you are getting value. All right, and here's at 775, 770. If I click there, we're on the put side. We're looking to sell on one end here. Yeah, wow, 72 cents on a 5 wide. So not really. Well, look at that. It's a 40. You're getting, over here, implied volatility about 40 still. But there we go. Ooh, still wide spreads, huh? If you go down that far. Let me just take a look at it and just see what we're looking at here. Yeah, about a 430. So some traders might look to get a little bit more. I did look at this a little bit earlier. The numbers were better. I don't know. Maybe towards the end of the day, those spreads changed a little bit, but oh well, that's okay. Got to adjust. It's about a 16%. But of course, we're going quite low. Our delta is at about 19 right there. Expectation of about 19% that we would hit that level over the next 38 days. Okay. Again, the delta represents a $1 change in the underlying stock to influence the delta move on the spread here. Really kind of a wide spread though, but again, it is a $700 stock. So that is one to consider. It's, well, I don't know. I'm going to do a couple in here just to kind of show it. But what I'm going to do is I'm going to also put in the other order here too, first trigger sequence. Or actually, that's fine. And we'll put in the opposite trade, create an opposite order here. I'm going to go with good till cancel. And I'm just going to set that stop level to try to get us out, basically double that range. So about, what, 1.24? Somewhere in there. We're only willing to risk a 1-to-1 on this. It's ahead of earnings. I realize there's that risk in there, but this is a way to look at smart money. It's an expensive stock, but I'm going to send it through anyways just to kind of take a look at it. And there you go. Okay, so I just got to show you that'd be an example, just example trades. Now, another thing that traders could do, they could look for maybe a move outside of this range or even getting past earnings. Why not wait till I get past earnings? You could wait to get past earnings and see if it's positive, and then potentially, and this could be any trade, right? This could be any trade. This is just an example, but if it comes down here and starts to bounce after earnings, well, then maybe that could be just a regular swing trade with stock as an example here. Look at some of these others in here. This is one kind of off the FDS. You see down here, I've made some lines. Let me just clear this off real quick. Yes. But the lines basically represent, though, at least these lines. Yeah, you can see the similar highs right here. Company called FactSet off the bottom, but totally different here on the money flow. Do you guys see that money flow? Huge difference. I don't know what happened around those earnings, but that can happen. You can see a big buy-in on earnings right there. I don't know, but I can tell you this, and we can all say this because we're just looking at it right now. Welcome, Kelly. No worries. Good to have you here, sir, and everybody. See that high up there? We're not up to that high. but we're above. What high are we above? Gosh, that high right there. So what high is this? Well, it's this high right there. You see it? Right there. We're very close to 400. Money flow says. So let's be a little bit more conservative. That's 400. Money flow says, yeah, we should, according to this, we have enough buying pressure, enough buyers have come in and started to accumulate down through here. And we're kind of wondering what on earth might the institutions know? Why? Look at you guys look at it. Do you see it? That's a chunk of volume. Now, the majority of this came on days that we closed higher. And how do we know that? Because we have a line that helps us to understand it called money flow. Let's just say we're not so aggressive. We're a little bit more conservative. We say down here, well, that's 300. It's another big round number, but perhaps we could be on our way up to that level. And we are past earnings on this one. Now, even more conservatively, I mean, that could be a sort of a flag pattern bounce, but even more conservatively, look at this. That right there is a measured move, for short. That's the range. If we just did another measured move, it puts us about right there, just below 300. That's still a pretty decent size move if I look at this over here. In fact, let's just measure it. This move to here, okay, is about 37 points. If we did the same thing over here and we go to 37, 40 points, it's about there, but that's 37 points or so higher from where we are right now. If it were to hit a measured move. So we're right here at this base. We could put like just a small trade, just as an example trade, just because we're checking this out. It's just above. Actually, it's above resistance and holding, which is actually can be construed as a positive. Things could always go down, but if we start to go like this and then break out, do you see the measured move? Do you also see something else there? Let's just call it what it is. Within that measured move, there's a flag pattern right there. It's kind of like a bull flat type pattern because it is flat. But I'm going to put one in here as an example. It's an expensive stock. We're only going to do 20 shares, but just as a case in point, I'm going to do, we'll do a target and a stop, and we know where to put that target at. Let's go ahead and set everything up over here as a 0.25, and good till cancel. Okay, we got our limit up much higher, like 37 points higher. But let me just do this. Oh. It's not quite there, but I'm going to show you something else. I'm going to set this stop at a different point. We don't really have like a great level. I'm going to use an ATR stop. So let's do that. We'll set this in place right here and close, show it to you. What is our ATR at? Average true range. Remember, this is like a volatility adjusted stop right now. ATR, a standard ATR, we're just looking at, ATR, hang on a second. A 1 to 2, that's a 1 ATR right here. 2 ATR would put us close to about 20. And that's kind of, we're kind of looking at, I've got to space that better. 1 second. Let me get this upside. I'm sorry, I didn't catch the number. I just used these lines to help me quickly get to it. I'm just going to activate it again and pull it up so we know where that's at. See, we're way off. Okay, so this is kind of our target up here. And by the way, like I said, this is like kind of a bull flag type target. If it does unfold or a measured move, you kind of getting an overlap over there and maybe coming close to some resistance over here too. But on that ATR, that's a 9.6. Where does that put us if we just drop this down? Yeah, we got close. 1 ATR is about there. We're very, very close to it. I'm going to go ahead and just leave it basically in that level. And what that represents is we'd have to, trade below today's low, the prior low, and the prior low to get knocked out of that trade. So really, in terms of a potential risk to reward, we're knocking it down this much with this much upside potential. for our T2 target on a flag. Okay, that's a huge example. Let's get some others here, kind of mix it up a little bit. Here is INCY. Yeah, we're not looking at the ATR here. I'll just take it off here for a sec. Okay. Look over here with me. Now, this is sort of one of those areas too where we might not be seeing a ton of strength right now to the upside in terms of price action. But look what's happened to that money flow line. And the question is, have we seen accumulation or distribution? That line helps us understand that. And when that's the case on okay, let's just call it what it is. That's a long upward move and then an extended consolidation, which is holding a lot of the ground that it made over here. This is a big run, and we're just giving back just a slight, I mean, relatively small portion of it because it ran up even further. So it's like a weekly bull flag. But if I draw a line through 90 here, what levels are we holding up near? We're holding up near this level, very, very close to these prior levels. So we might be holding this high range as long-term support. Okay, we might be holding support there. And if that's the case, we might not see a lot of bull signs here. But what some traders could do is they could then maybe institute a sell put and a buy put here. That way, just like on that first trade we did, prices could go up, it could go sideways, and they could go down to a certain degree where we're selling that put. So 3 directions, it looks something like that. Not down as much, but 3 directions, and we could still maximize our gain is what traders would look for, right? Now, short options could be assigned at any time, like we said in our disclosures, but if it holds above that short strike, then traders will oftentimes just be looking to capture that full premium. Okay, and so we could be looking at lower levels down here. Now, notice what I'm pointing to right here. Oh, what's that? Oh, that's a 1, 2, 3, 4, 5, 6 levels over here. Maybe there's some support over there, question mark. Maybe so. I mean, we actually got to the top of it right here and we bounced. So selling below this level, maybe? Because maybe it holds here. Just an example as we're saying this, because I think we tied, it looks like we're almost tied at the all-time highs on that money flow, which what does that tell us? That we should extend above our highs here. Right now, is that's what it stands. I mean, that's what money flow tries to tell us. That's what, no indicators 100%, but it says we could get to this level or higher. So is there an upward bias over the time frame that we're looking at? Yeah, perhaps there is. Now, what do we have over here? We have earnings. Okay, so let me just quickly show you what this looks like. Here are the earnings over here. Oh, not good. Excuse me, not earnings, but the options. I was just looking at earnings, but the options are horrible. So it doesn't work. I'm going through the steps to show you. So on something like this, a trader might look to just do a possible trade whenever they're getting the indications, the signs, the technicals to help them in that area. But this is another example. Let me throw out just a couple more before we go into another facet altogether. GBCI is one. Okay, that's another bank. Highs, okay. Definitely lows on the stock price. Let's just do it. Could we get up to this level 54? Well, according to money flow, the buying pressure is there to do it. We just cleared these prior highs, and so you might be upwards of moving. So a lot of the banks have been showing some buying pressure. Let's just do one more, and then we'll be good. On this. If then, so you see the triangle. Now, what direction might the triangle break out of? Look at this. Sideways, folks. Sideways, sideways. Tighter. We're coiling. It's a coiling range. What might the smart money be highlighting? Wow, we've already broken out. So according to the money flow, not only is the trend up, where oftentimes the triangle will break, but you're also getting a potential indication here from money flow. We actually broke out over here. We just came off the highs. And so it says maybe a move to the upside. Okay. Park that in the back of your mind. So just the correlation here is what we're looking for. All right. Now, let's do this. Is one thing we can tie in, and we talked about it a little bit previously, and that is, well, what about the fundamentals? Fundamentals can be interesting because that's where institutions are so big, you guys, that I mean, they can't just jump in and buy like on bull flags all the time, like we can. They're not as nimble. What they're holding. I mean, a small position for an institution might be a $10 million investment. I mean, no problem. You know, depending upon the size of the company, it could be. They don't exactly get in and trade the bull flags, for example, the way we do. So they're looking at signs that, hey, because they hold it for oftentimes a lot longer periods of time. They're looking for this. They're saying, man, we've got to make sure that this company, we have an expectation the growth is going to be there so that overall, it just kind of moves up over time. Sure, they're great holding through bull flags, no doubt, but can they trade them is the real question. So we need to consider some of the big players out there are looking at too, and those are fundamentals. Let me just do this. I'm going to pull this up, and we can tap into a lot of those right over here. Now, I've just signed into the Schwab sort of demo account that we've got here, and I want to highlight this for you guys as we go into this. So let's do this. I'm going to go into the research section. I'm going to go right into stocks, and I'm going to show you how we can pull this data that institutions themselves print out and say, yeah, we think there's going to be growth. And then that can be combined with a smart money indicator like the money flow. We've got these great tools right here. I'm going to create my own, and I'm just simply going to go over here and click on basic. I'm going to go into an index because I want to look at the S&P 500. I'm going to come down here, not to any particular industry, but I want to show you what oftentimes under company performance, when a company reports revenue guides, when revenues are higher, that can lead to an increase in earnings per share, right? What's great is we get to look at both and we get to do it on each of these on an estimated basis. So we get to see what some of these big firms are listing in terms of their estimations. And what I want to do actually, I want to set up first is the next fiscal year in terms of revenue first. Okay. And I'm going to leave it open. I am going to highlight one area here under next quarter. And that's current quarter versus the next quarter. And I'm just going to go under the next quarter and I'm just going to click under here and say, if I'm going to be getting double digits or 20% earnings growth, let's just say on average, I need to be getting at least 5 a quarter, right? At least 5 on average a quarter. Okay. I want to have that in here so I can narrow this down. And I'm just going to add one more category, and that's going to be our earnings estimated growth. So we can see, hey, how much of this actual revenue is going to translate into earnings as well. We want to see it from both sides. So if the revenue is guided higher, their anticipation is that earnings, believe it or not, sometimes when you get higher revenues, it does not equate to higher earnings. Why is that? Because the costs are going higher too. Inflation's impacting the business. Come down here with me, folks, right there. Next fiscal year, I'm just going to look at the full year. We've got 224 matches. I'm going to go ahead and click it right now. Now, the beauty of this is when you scroll down here, you can only pull up 60 per page. That's it. So if you download and export to CSV, just pull it up like an Excel spreadsheet and, okay, there it comes up. And you can pull it up right here. And look at that. Isn't that beautiful? You can get everything lined up. That's all of them. That's 224. And then this way, you've got a great reference there. Now, quick points. I've highlighted this and I have organized it based upon the fastest growing revenue on the year. That's how I categorized it first. So that's how it's downloaded in this column. We can do it in Excel. We can also do it on the Schwab platform just by clicking the column, right? Highlighting it and downloading it. Look what you got here. Interesting. Micron Technology, folks. Broadcom, AMD. NVIDIA, you've got Apple, you've got some of the storage companies, Western Digital, Seagate, that ties in with Micron as well. Look at these. And by the way, they're all in the 5% exactly like we had required. And the list goes on, but there are technology companies. Look how this is translating over here. See that? Estimated earnings per share growth yearly. That's on the year. So maybe in discussions, maybe in their own analysis, a lot of times when these institutions talk to these firms, they get a sense of what's expected and what could carry over into earnings. Well, having said that, let's go back into our charts real quick and let's just do another trade on this. And what I want to show you right now is we have on that list, let's just pull it up again. So we got, I want to look at AVGO. You can see that a bunch of the estimated first quarter growth, think about it. What does this mean? 30% over the last quarter and 23% on the year over year. 56% higher than prior years. What is AVGO doing? And what are we seeing on the money flow? Okay, look over here with me. We're starting to see, we did dip a little bit here, but we've held up very, very well. Money flow has basically held up here. We've dipped a little bit, but we're already starting to spike back up again. It'd be a very interesting one to watch on today's price movement. Are we holding near that 300? Yes. Yes, we are. And money flow has been really quite strong. In fact, I'm just going to go to a 2-year real quick just to highlight this so you can really see the extent of how far we ran. And you can see money flow has just consolidated at the very, very end. In fact, what was interesting here, within that Q1 time frame, we did make our highs right through here. We made highs. Now, we did dip with market volatility recently, but numbers could be good over here. They could be good. So what about selling below a big number here? What about waiting for a trend to emerge? Because Q1, yeah, we want to, I mean, traders might want to position themselves for stronger revenue, stronger earnings numbers that can hold up. Here's AMD as well. Yeah, AMD, we did make a new high here, and we are generally holding up with the trend quite well, too. So these are holding up, and these combine with their expectations. So I'm just saying, if we look for institutional money flow coming into these, the thing that we should also focus in on are do the numbers that they're giving us add up as well? Let's just do this on the AVGO. Let's slip one in. This will be our final trade and we're all set. I'm going to look at this. I'm going to say if we went below this level here, okay, and so we're looking at this let's just do AVGO here. Example trade. Below 290, even below that 300 here for the month of May. Okay, let's go ahead and just set this up. So month of May, again, we're taking advantage of a higher VIX, more premium, and I'm going to sell that 290, buy the 280 right there. It's a 170 credit on this. Okay, 170 credit. Let's just see what this looks like on that spread. It is a 10 wide, keep that in mind. So return on risk, let's just go ahead and measure this and we'll be all set. 170 divided by the 830, about a 20% return. I guess you could say it kind of rounds up to 21, but there you go, right in that range. I'm going to go ahead and just put this on through since we're kind of low on time, but I did slip that in a play of the possibility of, holding that 300 as we extend into the first quarter guidance. Okay. So it's a difficult time in the markets, folks. It's challenging, but we're using the tools that are available to us to use in the form of money flow and others. So folks, again, if you found this information useful, smash that like button, follow us on Trader Talks, the Trader Talks channel, and be sure to fill out that survey if you're able to. Just 2 questions. And there are any comments that you might have about the discussion, any requests as well. Thank you, Ben, as always, for your help. And it has been good to be with you all today. And with that, have a fantastic rest of the day. Look forward to future discussions. We'll be watching some of these volume-based indicators and others as well. All right, I'll see you next time.